Hi there, Stuart Bergman here with another economic commentary. You know, it's hard for exporters to take much comfort from the news cycle these days. Persistent supply chain issues, ongoing labor shortages, surging input costs, and a raging war in Eastern Europe dominate the headlines and set the context for Export Development Canada's mid-year Trade Confidence Index. Now, coming into the year, Canadian exporters were brimming with confidence, albeit moderated slightly from the frenzied heights this time last year, dulled by the uncertainty surrounding the COVID-19 induced downturn. But things look good, despite all the challenges, and prospects for a continued resurgence in activity were firm. Our latest TCI survey results, published on June 16th, reflect the pervasive sense of confusion and turmoil being felt by Canadian businesses, exporter or not. The overall index dropped for a second consecutive time, down nearly 8 points to 69.1, a level well below its historical average of 73.2. Given the global nature of today's challenges, the drop was reflected across all regions in Canada, businesses of all sizes in almost all exporting sectors. The mood among the extractives industries was likely buoyed somewhat by the run-up in prices for key industrial commodities. While all elements of the index contributed to the decline, including export sales, domestic sales, world economic conditions, domestic economic conditions, and international business opportunities, respondents reported feeling most concerned about the global economic context. Exporters reported significant headwinds from a number of sources: the ongoing conflict in Ukraine, spiking inflation, global supply chain snags, labor market imbalances are all impacting profit margins and altering short-term strategies. Additionally, how central bankers might respond to inflation, or even what they might do in order to prevent inflationary expectations from firmly taking hold, is factoring into respondents' plans. More than 40% expect worsening financing conditions, a significant increase since our last survey in December. Overall economic conditions aren't only clouding the near-term outlook. In fact, the majority of Canadian businesses indicate long-term impacts from supply chain disruptions and inflationary pressures. More than half expect supply chain issues to last well into next year, and almost 70% of respondents expect ongoing inflationary pressures on their businesses to last well beyond April 2023. This is going to impact companies' input costs, overall competitiveness, and ability to retain the critical talent that they need to meet growing customer demands going forward, creating challenges for future business planning. In a blow to the much-needed diversification plans that tend to result from economic crises of this magnitude, the uncertain global economic environment and expectations around long-lasting inflationary and supply chain impacts have resulted in a significant number of respondents scaling back their plans to export or invest abroad. In fact, only 64% of respondents now plan to export to new countries, down significantly from 78% in our year-end 2021 TCI. And even among those planning to diversify their export markets, the top new export destinations are really restricted to the traditional markets of North America and Western Europe. On the investment front, only 21% plan to invest outside Canada, a reduction of 4 percentage points. While fewer businesses plan to invest abroad, survey respondents don't actually seem to be scaling back on overall investments, however. In fact, investment intentions are holding steady, for now at least, with 37% of respondents still planning to increase business investment over the medium term. That said, hiring intentions have moderated somewhat amidst rising uncertainty as respondents continue to report increased difficulties finding skilled labor. The bottom line? There's no way to sugarcoat this. Increased global uncertainty has made Canadian exporters gloomier about prospects for trade. But for the time being, and consistent with our economic outlook, trade with the U.S. remains strong, with almost 90% of respondents reporting increased or stable orders south of the border, building on the gains made last year. Production also continues to recover from the lows of the pandemic, with 26% reporting higher than pre-pandemic levels of production, up 3 percentage points on our last survey. As tensions fueled by the war in Ukraine ease, supply chain logistics improve, and monetary policy measures begin to have their intended impact, here's hoping that a return of global stability will be cause for optimism when the survey goes back into field in December 2022. This week, a very special thank you to Prerna Sharma, EDC Economics' newest senior economist. On behalf of all of us, Prerna, welcome aboard. We are so happy to have you with us. As always at EDC Economics, we value your feedback. If you have ideas for topics that you'd like us to explore, please email us and we'll do our best to cover them in future editions of the commentary. Until next time, thanks for tuning in.